So good morning. Today is Thursday, March 12th, 2015. This is your daily Forex trading strategy session. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. We do these events every single day. They're absolutely free. So swing on by. So I'd like to start with a quick overview of the markets. S&P 500 up 6 points. Dow Jones Industrial Average up 54 points. Blah 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 blah. 10-year T-note is 2.07. That's lower. That's a lower yield than last week. Or yesterday. Sorry. Boy, it's hard to think and talk at the same time. Okay, so what does that mean? Just very quickly, if yields on the 10-year T-note have fallen in the last 24 hours, what has taken place in the capital markets? No, don't give me fear. It's normal business. There's no fear anymore, Joseph. You're so that was the right answer 3 years ago. 5 years ago. Just people have purchased bonds, more bond buying overnight. That means the price of the bonds have gone up, and the inverse relationship with yield means the yield comes down a little bit. I would like that to go up. I like to see yields rise, and in that case, that means people in the stock market, and they're getting out of bonds, right? So that means they would sell bonds, prices of bonds would go down, yield would go up. European markets have been mixed overnight. It's 7:30 a.m. New York time, just FYI, depending on where you are in the world. Asian markets closed higher, gold is higher, oil is higher, dollar is lower, pound, right, versus the pound, lower versus the yen, lower versus the euro. Ha! Aussie dollar is actually strong, Canadian dollar moderate, neutral really, and Kiwi has been strong. Continuing with the update, New Zealand kept their interest rates unchanged at 3.5%. Now that's expected, but there is chatter that as long as China keeps falling, Australia and eventually New Zealand are feeling the impact of that. So, but they didn't cut interest rates yet. It could have been. It could have been on the table. We don't know, but they didn't. But let's talk about China very, very, very quickly because we need to go. But what's the trend in China, in the Chinese economy? It's falling everything, right? GDP down, industrial production down. And then all that kind of economic data impacts the central bank's policy, right? So what has the People's Bank of China been doing recently? Well, they've cut interest rates and the reserve requirement ratio. Just very recently. Both are extremely accommodative and are likely to increase money supply. Right? This is what we've talked about. Was it last week or maybe the week before? I took you through the whole fractional reserve banking system and showed the impact on money supply from the reserve requirement ratio. Remember all that? You guys now are experts in central banking policy. Overnight, China released their M2 money supply data. Well, this is what we talked about just last week and the week before. I think they adjusted what RRR on the previous Friday and then cut interest rates on Monday, and so very, very recently, right? So anyways, today they talked about M2. Who remembers what M1 is? We talked about M1 and M2 and then very quickly talked about M3. You probably didn't remember. I'm sure you didn't take notes. M1 is money in your pocket and money in your checking account. Liquid as liquid can be. You can spend it right now. Right? So the example I gave a week ago was, look, you might think gold is liquid, and you're like, hey, Wayne, this gold is the same as money. Okay, well, go to the grocery store with a bar of gold and try to trade it for a loaf of bread, some milk, and some eggs. Do you guys remember that example? Is it really that liquid? It's not that liquid, but you'll need to convert it to something liquid, and you'll need to go through a process, and so it's, it's close. And let's say it was a gold coin instead of gold bars. Well, still, you got yourself a gold coin. Would you really be able to do that? And plus, how are they going to value what it's worth? And then, all that kind of stuff. So it's not easily divisible and all these things. So it's money, but it's not that liquid, right? So anyways, M1 is completely liquid. That's money in your pocket. That's money in your checking account, meaning you can just write a check for the eggs, right? Eggs, milk, and bread. You can just write a check and give it to your grocery store. Your check isn't money, but it's very, very close. M1. M2 is now your savings account, because you can't write a check against your savings account. It requires you to essentially go to the bank or go online, physically transfer it to your checking account, and then write a check. So it's pretty liquid. It's more liquid than gold, but not as liquid as cash. So on and so forth, right? So long story short, we talked about that a week ago. So we saw them doing things like lowering the interest rate, lowering the RRR, which then would tell us that the money supply should increase and create things like consumption. Well, today, China released the M2 money supply, M2, cash, checking, savings, right? Cash in your pocket, money in your checking account, money in your savings account, right? That's M2, up 12.5%. Woo-hoo! Wow. Right? There you go. Now what's interesting is M1 money supply is up 5.6%, so the other is M2, which is saving. So anyways, that may in turn affect other things, right? So if the money supply does increase consumption, who's going to benefit? Come on, guys, give me some answers. These sessions are going too long. I keep going like over an hour every time. Right? Let's go, go, go. Participation. No, think outside the borders. We're currency traders. We don't care about things like that. Currency traders. How do we make money? Mr. Forex? Commodity currencies. Thank you. So maybe, just maybe, if the M2 money supply continues to go up through expansionary programs from the People's Bank of China, right, then that could one day help Australia, could one day help New Zealand, so on and so forth. Maybe Brazil for their soybeans and all that kind of stuff, right? Who loses on this one? This is well, you got to think about this one. Okay, so Australia and New Zealand might win. Who might lose? Nobody even typing. Who competes with China? Japan? Who else? Who else is a regional competition? Korea! Yeah. So guess what? Korea surprised everybody overnight by lowering interest rates by 25 basis points, all the way down to 1.75%. A record low. Why? Increase of money supply by lowering interest rates and lowering the reserve requirement ratio in China lowers the value of their currency, So now their competitors have a disadvantage because their currency is overvalued relative to China, their number one competitor. So therefore, Korea has to do something in response or lose market share, if you want to look at it that way. So Korea lowers interest rates to an all-time low in response to accommodative easing in China. There's a winner, Australia, New Zealand. There's a loser, Korea, India, whatever. Cool, huh? And you thought macroeconomics was boring. Well, this is how we make money, my friend. This is how we make money. So Australia released their job report, 15.6 thousand jobs added. Unemployment rate has fallen to 6.3%. Japan, consumer confidence, 40.7, third straight improvement. All right, whatever. Going over to Europe, Germany, CPI is 0.9. Month over month, year over year. Check this out. German CPI year over year, 0.1. Now let me ask you something. Do you think the economists are that good? Do you think they're really that good where they're like, the German economists got together and they know without a shadow of a doubt that their CPI isn't 0.0? What's the rounding error on this thing? How do they know it's not, right? 0.0009. It's so funny, right? It's 0.1, not 0. It's a positive number. Sure it is. Whatever. How about the French? Negative. All right, Sweden. Let's go to the Swedish unemployment rate, 8.4%. Oh, snap. That's not good. Now, we talked briefly yesterday about mortgage applications. I don't remember if we recorded that one or if it was just a spontaneous discussion. But we talked about mortgage applications were down, and I thought, you know what? I'm a little bit surprised by that because so many people have been renting over the last 5 years because they didn't have a job or they didn't have the credit or they were young, so on and so forth, right? So that they've been forced to rent. So I thought, well, we must be getting to an equilibrium point where the rents are so high that it's going to force people to start buying that couldn't buy before, but now they have a job and their credit is improved and credit is available, so on and so forth, right? So I was expecting mortgage applications to go up. So today, guess what? Manhattan studio prices were released. They released the average price for various things like studio apartments, $2,300, one bedrooms, $3,400 per month rent in New York. So anyways, rents are going up like crazy in New York City. We just talked about that yesterday, but in sort of more a low level. So that's been now confirmed. So I think eventually we're going to get new types of buyers into the market, and that would be first-time buyers of homes, people getting out of their rent home and to purchase them, and so on and so forth, which means what? A lot of the money parked at the Fed to cover reserves, and right now there's way more than usual. So maybe banks will start lending that out as more credit-worthy first-time home buyers are going to start buying houses. Cool, right on. So we'll have to follow that. Today on the calendar, and you got the calendar right in front of you, initial jobless claims at 8:30, retail sales at 8:30, import-export prices at 8:30, consumer comfort by Bloomberg is released at 9:45, business inventories at 10, federal budget at 2. And I think that's a reasonable overview. What else? Anything else on the calendar here? Some manufacturing data. Some CAD home prices. So we'll keep an eye on that. All right, let's do some technical analysis. Here's a Kiwi. So, if you're a price action trader, okay, you're still thinking this. If you're a swing trader, this up here is an old 382 of a down move. So another trader would look for something like this. So there's two opportunities, and they might present themselves like that. And this is sort of probably the middle here. Okay? That would be like we're at a 50% retracement now. It might go up, or it makes a lower low, which is fine, or retrace, and we sell in here. Okay? Right now, it says it's going to move up. If you're just doing short-term price action, aka scalping, if you will, a 5/8 cross up now would be very interesting. Okay, oscillator's almost ready. That's a 5-minute chart, by the way. Oscillator's almost ready. You're at a 618. That's the sweet spot. If you recall, the sweet spot is in here. So if you were going to buy, that would be ideal. You don't want to buy way down here at 786 because if it's so bullish, why did it make an 80% retracement? Right? You see the logic there? If it's so bullish, why did it fall so much? Why didn't the bulls buy it? So we're right in the sweet spot where if you were going to buy it, you probably should get ready. Trigger would be like a oscillator cross, as we've discussed before, maybe a 5/8 cross. Okay? Since it's short-term trading, your stop would just be below the lowest low. Okay? And just below the lowest low, so let me mark it this way, your stop would just be there, right? If you were a bull and you bought it now. Now, if you're a bear, cool thing is, this where, sort of your area where you would want to be below with a stop loss on a bullish trade plan, that's actually your entry for a bear. Okay? So like, you let the bulls fight it out, and if the bulls fail and it dips below here, now there's no way in the world it can be bullish. But as a bear now, you let it break, and you say to yourself, okay, we're in a downtrend now, and you wait for the pullback, and you sell in this area. Oops. You see? And you'd be short in here. Okay, that's just simple price action. Cool, huh? This is the old Selzone. Let's back out. Let's go all the way to a 4-hour. Okay. If you were a bear, you would want to sell here. What does the 55 EMA tell us? If you do sell, what's your expectation? Mike, that's short-term scalping, not necessarily a trade plan. Just price action. Short, yes, short but cautious. Thank you, YJ. Okay, because the 55's in control, you're bearish, but moderately. And in fact, because you're moderate, you're going to be worried about a double bottom. In fact, it's such a fast pullback, you might also want to be worried about the reversal area. So it could come down here and pop up. It could also come down here and pop up. The psychological aspect is, if it was so bearish, why did we make this huge green candle run? Right? Why didn't people sell it here if it's so bearish, right? So it seems to me you could get up, down, up fairly easily if this is a reversal. What? Which means what? Pound yen? I mean, we only talk about it every day, right? Is that enough? Okay. Okay. Look, do you think the psychological level of 87 played a role? Yeah, me too. Yes. Pretty mediocre all over the place. Okay. The only thing that might be going on here if you're a bull is this. Okay. If you're a bear, you know, this chart is just not a good chart, but how would you mark this up? Like that? Right? But look at this on the daily, guys. Right? So that might have some legs to it. In here, it's still a high, or let's say an aggressive trade. But if it made a higher high than this high and broke this, you know, kind of channel, I guess you might want to call it, because I'm sure you could have it drawn like that. If it breaks, you want to look for one of these things. Okay. So buying it before it's aggressive, but not crazy. You'd need to be a bull on this for whatever logical reason. But I have seen better setups in my lifetime. Okay. Now that you see it was plausibly a psychological level, do you think the M2 weekly S2 played a role in reversing this currency pair? Okay, simple pivot points. Now, if M2 turns out to be the bottom for the month now, let's talk monthly pivots. Let's say this pair does reverse and it starts going up now. Yen weakens, Kiwi gets strong, whatever, for whatever reason. If M2 turns out to be the bottom, what's our projected top for the month of March? Bum 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 bum. M4. Bum 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 bum. And that is 89 some change. No, that number's wrong. Sorry, 93.5 to 94. I'll say 94. 94. Let's see. Unless, okay, let's go to scenario number 2. Unless we count this, that low is M1, monthly M1 data. What is the upside? What is the upside potential for this currency pair if M1 is the bottom for March? It happened to occur like on the first day of the month or last day, depending on how you want to look at it. M3 and oh snap, that is our high. That is the high, guys. That's scary, huh? So according to pivot point theory, notice how it's on the very first day of the month, but we'll have to include it, right, if you want to do it that way. Pivot point predicts M1 to M3 to be the range. And that's the range right now. Isn't that crazy? Look what happened. We hit M1, happened as far as the velocity of change of direction. And then we hit the projected top. Look at as far as the velocity of change of direction. Do you think that's a random walk, ladies and germs? That's just completely random? Or do you think at least somewhere some quant has monthly pivot points into their algorithm? Any chance of that? And create high risk zones at the bare minimum? If you had a PhD and you can program a computer to identify risk areas, do you think you'd program monthly high, monthly low, monthly close, divide by 3, create a central point, identify support and resistance levels in the market? I mean, it seems pretty clear, doesn't it? Okay. For example, let's do exactly M1. Okay, it's not, I'm not creating a huge zone. That's exactly the M1. And if that turns out to be the bottom, here's exactly a monthly M3. There's a variance of, this one missed it by about 1 pip. This one went over by 30 pips. So we're 31 pip on 84 to 91. So many hundreds and hundreds and hundreds and hundreds of pips with about a 30 pip margin of error. Cool, huh? I know there's a lot of lines here. Just simplify it. Let me do it one more time to make the impact. This was the predicted top when we were still down here, and this was the actual bottom. Okay? So the actual predicted range based on pivot point theory on the first day of the month if you're using pivot point theory and you say if that's the low, this would have been the projected high. And this was the margin of error. Right? All right, you guys think that's boring. All right, fine. So that's why I kind of look at this still and think, yeah, I want it to go up. The rest is, hope. Right? Not much of a strategy. But but there's some potential. Price action's really not that good. I think we have this on a pound as well, right? Essentially, we're just looking at this massive double bottom. Okay, so if you're trading a double bottom and you expect it to go and retest the upper end of the range, what do you look for using technical analysis? 1, 3. okay, with the Stokes kicker. Okay. Notice the pivots. Some nice stuff going on in there. Cool. Notice the arrow too. Can you see the arrow that we drew months ago? Can you see it? I like to leave myself little momentum, keep myself in the know. So who knows? Maybe this is the new channel. Okay. Let's talk about euro. Why did the euro decide to stop falling? Psychological level, you think? 105? Okay. Traders, you take a low. Right. Well, first of all, let's do price action, like I was showing you earlier. Okay. Drop, lower high, lower low. When you do that, you take the, let me get my change color drawing tool here. You take this low area, and it should act as resistance in the future. Okay. So now you sell it again, makes a new lower low. As soon as it makes a low, you take the previous low and you make it resistance for a future sell zone. Comes back, sell it again. You mark the lowest low as a possible sell zone. Notice though, the distance is falling each time. Okay? And breaks above both of them. I think we could call that a change of direction, right? So you take this even farther out. Oops. I didn't mean to make it that thick, but whatever. So it does come back. The most important thing though is you look for this old area. Let me redraw it. I'm going to have to use a different color. What I wanted to do is show you that you take these low wicks and you bring that over, okay? That is one area mentally thinking about as a sweet spot. What else do you use as a guesstimate of where you would want this thing to go up? What other tool do we use? Yeah, well, Joseph, who taught David for 2.5 years? Yeah, so you have Fibonacci, correctamundo. So anyway, so whatever you use, eyeballing it, all that kind of stuff, it's all the same, only the names change, right? And so you got that. And do you think the old resistance area, or sorry, the old support area, do you think it'll be respected again? This area here? What do you think, guys? Let's predict the future. Yeah. So you plan for it. So a bull would plan for this. What would a bear plan for? Okay, you should be able to do that. Predict both sides. And then pick a team. Okay? Those are the two scenarios. Simple price action again. Now you could throw in pivot points to help you predict or guesstimate where these changes in price action will occur. You could use psychological levels as well, but the logic is still going to be the same. An uptrend is a series of higher highs, okay, higher high, higher low, higher high, higher low, higher high. That's what a bull is thinking. What does a bear think? Lower low, lower high, lower low. Okay? So you just plan it all out. Pick a team, plan it all out. And again, if you're wrong, let's say you thought it was going to do this, and you bought here on a retracement, and the cycle just comes down too far, and price does this. Well, then you take a small loss. Get over it. If that's a problem, you're over leveraged. Drop your lot size significantly. Right? This 15-minute chart, the price is going to fall for 2 hours. How's that? So I would say somebody's playing it like that, which means it's a higher time frame. So look at it from an hour now. Okay? And that's what somebody's doing. So let's try to figure out what the bears are thinking. They're thinking it's a 382 Fibonacci retracement. And if the 15-minute drops for 2 hours, what happens to the hourly oscillator? Well, if price drops for 2 hours on the 15-minute chart, then you're going to get 2 red candles on the hourly chart, right? If the 15-minute drops for 2 hours, we'll get 2 red candles, which then would tell the oscillator on the 1 hour that the hourly candles are no longer making higher highs, and it will cross down into the trade zone in a bearish fashion, which would mean then this is going to fall for 12 hours. What? Which means we're going to get 6 15-minute cycles of 1, 2, come on, trying to get my mouse, 3, 4, 5, 6. So what's going to happen here? 1, 2, 3, 4, 5, 6. Oh, snap. I just planned out the next 12 hours of your life. Using my crystal ball and a whole lot of technical analysis. So if I were going to plan, if I were me, I would plan for this. All right? Bada bing, bada boom. Okay, cool, huh? Is that helpful? We're looking at this from multiple angles, multiple time frames, and trying to overlap them. Yeah? Anybody else? Joseph and YJ? Jim, Denise? Well, how about some questions? No. I mean, I just got pretty specific over the next 12 hours of your 15-minute chart price action. Jen, cable failed at the weekly R2. Yeah, you could do it that way. Yep, R2 to S2. I'm okay with that. That's an inside week. Well, first of all, SP law, don't say wave. I'm nitpicky on terminology because I think if you say wave, it's going to be misunderstood as like Elliott wave analysis. But cycles. Law, it's a complete total guess. But I ask myself, how long does it typically take a 15-minute chart to make one stochastic cycle? Here's one. Okay, let's see. 1, 2, 3, 4, 5, 6, 7, 8. Oh, 2 hours. This took 2 hours. It might be 2.5 hours, it might be 3 hours, it might be 1 hour and 3/4. 55, Joseph. Okay. So then you look at it from an hourly perspective. How many hours will one stochastic oscillator last? Well, let's look at this one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and at that point, you get a 5-8 cross. So I said 12 hours. So obviously, I'm going to prove myself right. So about 12 hours. Okay. Of course, this one lasted, 12 days. It broke out and trended. Okay. I'm not suggesting it's going to do that. Why? The 55's in control. So I'm just expecting this and then that. Mm-hmm. Uh-huh. Oh, yeah. Oh, I'm guessing. Why 12 hours? One candle, then it gapped over the weekend, 2 candles, 3 candles, 4 candles, 5 candles, 6 candles, 7 candles, 8, 9, 10, 11, 12. So on the 13th candle, it created the range. Okay. And then after that, it seems like it just moved sideways and pulled back. Okay. So the math is I counted how many 1-hour candles lasted in this cycle. And I'm thinking, well, if it does kind of the same, kind of maybe it'll be like that. It'll take between 8 and 16. How about that? Hours. It's just a total guess. 12 hours from now is what? The Australia, Japan, and Korean stock market open. Followed by Shanghai. Preceded by New Zealand. It's the next open. Okay? So Asia open. Yeah, the Asian session is about 12 hours. So how about down for 12 hours? Asia brings it up, and then what? The London boys sell it hard and it breaks then. So now I'm taking you out about 18 hours worth of price action, telling you how and why and where it'll fall, then rise, and then where it'll fall again, and then London will break the lowest low, and we'll continue our trend. And the oscillator will look like this. So now I'm even telling you on the hourly chart, it's going to make a full 100% drop, 50% rise, drop again. Nice. Cool. Right on, Law. I love it when someone says, oh, I finally get it. Well, I'm glad we took the time then, right? So the day of the week, is it Thursday? So tomorrow at FX Street, I will be hosting this event because I only used to do it Monday through Thursday. So I will now be doing this event on Fridays for you, just not in this room. I'll be in the FX Street room. So I expanded my service to you to every single day of the week. So I hope, A, I hope you appreciate it. And B, I hope to see you tomorrow at FXStreet.com. The same sort of event. I'd like to maybe take a look at some longer term charts and so on and so forth. So here it is right on the homepage of FX Street. That's moi here. So you go to FXStreet.com. There's a homepage. Oh, that's me. So you can register. Live Forex strategy session. Sounds a lot like this. Right? So you can register here. Let's see how many people have registered. All right, only 332 people have registered for tomorrow. What's sad is there are only 333 spots available, so you better sign up quickly. They might actually have normally maxed out at 500. I know when I do my non-farm payrolls there, we have seats for 1,000. One month, several years ago, we did the non-farm payrolls event, and so many people attended that the ISP crashed. Not the server, the internet service provider holding the server. So anyways, I'll see you guys over there. Well, no, DeBeesta says I'm going to bust the FX Street record. I hold it. I am the record holder by far. I think it was just shy of 1,200. It was like 1,150 or something like that. And then, like I said, the ISP crashed, and the webinar. I think we lost the last hour of the webinar. Can you do a map of where all the people are? I don't think this, the room that I'm using allows that. I like that. I think it's fun. Let me see if I can. That is fun. I don't think you can see anything now, right? Can you see where you guys are? No, it's kind of cool though. You can do it that way. quite a few people on the west coast of the United States, quite a few people on the east coast of the United States, one guy out in Winnipeg. Who would be in Winnipeg? Quite a few people in the UK, and a few other people spread around, a few in South Africa. Coolio. Yeah, yeah. Where's Japan, right? They throw Japan in with Indonesia. What's going on? Whoa. Let's see if we can. Oh, come on. Let's go find our friends in Japan. India. Look at the Himalayas. I've been on both sides. I've been right here, and I've been right here. Both sides of the Himalayas. All right. There's our Japanese friends, Wyatt and YJ. And there you guys are. Nice. So anyways, yep. There we go. So peace on earth. May the pips be with you. May your profits be above average. Thank you to Traders Way, and thank you for being loyal clients of tradersway.com. I'll see it over at FXStreetcom. Make sure you register. FXStreet.com. Click on live Forex trading strategy session, and you can attend that event for free as well. Have a very nice day. Have a very profitable day. Remember, stay small, stay humble. Always focus on the long term. Never risk money you cannot afford to lose. I guess it should be mentioned that trading and investing is risky, not appropriate for everyone. Your past performance does not predict future results. If you run into somebody from the NFA on the street, kiss them on the lips. Cheers.